my question for you on this is not so much about the rationale for why they made these moves, but whether you believe they were seriously under pressure and still might well be seriously under pressure and facing liquidity issues, and how much worse or different the problem might be for those platforms if what all of their customers were trying to do was head for the exits as opposed to buy more of a certain asset.
Yeah, well, Robinhood, just like Interactive Brokers and Thomas Petterfy, what they had to do is they had to balance the regulatory requirements versus the moral requirements of actually shutting down trading, especially when so many of those traders, Robinhood traders, probably came in and got long GameStop up in the 320, 330 range. But they do have regulatory requirements from their capital position. And as Mr. Petterfy correctly pointed out, when you are a self-clearing firm, if all of a sudden you have massive losses in there, the clearing broker, which Robinhood is now self-clearing, they've got to take on the losses. So that's why they really had no choice to shut it down. Of course, it angered most of their constituents and their traders, and they've now severely limited it where you can only buy one share of GameStop to open a position if you want to go long. But it really was a matter of balancing survival versus moral obligation. And the other thing that people need to remember, even if Robinhood still was clearing through their old clearing firm, that clearing broker would have called them up and said, shut it down right now. Take those stocks off of your list because they just wouldn't have the capital requirements. Actually, being self-clearing gave them a little bit more flexibility because they were able to go out and quickly raise $1 billion of capital to open up trading somewhat. But, you know, as long as the tsunami continues, they're still going to be under continued pressure, and they're going to have no choice but to limit trading in those names.
Do you see any opportunity here as a trader yourself, Keith? Would you short these names here? It's obviously not being driven by a fundamental case, or just stay as far away as you can.
Well, listen, a stock like GameStop, it's not a $320 stock. I mean, when you look at the actual fundamental business that they're in, often referred to as, you know, the blockbuster of the 21st century, just from their business model. I'm not making any kind of statements about, you know, management or what they're doing. They still have cash on the balance sheet, so they can still survive and maybe redirect their business model. But shorting these names, first off, if you can even get a borrower or locate, which is the rules and the regulations of what's supposed to happen, and then the expense of actually borrowing the shares probably doesn't make it, worthwhile. In addition to the fact is that it appears, for me reading the Reddit threads, this is not going to stop anytime soon. So I'm not sure going in here and shorting right here would be the wisest thing. Again, I'd kind of let the dust settle, let the tsunami pull back out to sea. And then if there's an opportunity, I would go in because I do not believe the share price of GameStop is worth anywhere near where it's trading right now.
Shepard Smith here. Thanks for watching CNBC on YouTube.